Hello there, welcome to My Finance Teacher. Today we're going to have a look at precious metals. But talking about precious metals, as I often do, I would like to start with the US dollar, which has been breaking down over the last couple of weeks, as well as in general all through the beginning of this year. The bounce into April and May was relatively mild. I still consider that the beginning of a new intermediate cycle in the US dollar, although it hasn't really poked above the 50-day moving average for a few days, which is usually one of the signs suggesting that a new cycle has started. Still, with a relatively steep 50 DMA, only a test is often enough to confirm a new cycle. So we've seen the previous intermediate cycle in the US dollar lasting all through September to April this year. We are now in a new intermediate cycle and we've already seen a lower low. That is not a good sign for the US dollar. This support around 98 or so on the DXY has been broken, which opens the possibility for the next support zone. That would be based on this low over here, the intermediate cycle low that ended at the beginning of 2022. That support is somewhere around 95. This first daily cycle of this intermediate cycle in the US dollar has been going on for 71 days. The usual duration is around a couple of months, but with the last few cycles, 1, 2, 3 cycles being relatively short, I would expect this cycle to stretch a little, perhaps giving a chance to the US dollar to come closer to that support level, not necessarily dropping all the way down to 95, followed by a bounce into the second daily cycle, but generally the intermediate cycle does not look good as we've created new lower lows already. Next, what does it mean for gold? Well, while the US dollar is perhaps declining over the next week or so to possibly test that support zone, gold has a chance to bounce into the second daily cycle of this new intermediate cycle. Gold too has started a new intermediate cycle all the way back in the middle of May. This decline has also been very mild, but we at least do see a poke, a very brief poke below the 50-day moving average, a poke below the relatively wide Bollinger Bands, and we do see a lower low on the chart. All are signs of an intermediate cycle low. We see that RSI has also dropped by well over 20 points and has decreased significantly from overbought all the way down to below 50. We also want to slice below the level of 50 as one of those signs of an intermediate cycle low. And within the new ongoing intermediate cycle, we still haven't seen the confirmations yet, but it looks like the first daily cycle has completed in only 46 days, although the usual is perhaps a bit closer to 2 months. Still, if the dollar continues to decline down into those support zones, gold might have a chance to bounce into the second daily cycle. And here's where the tricky part is. We would really like gold to break above this resistance around 34.80. That will give us new all-time highs on gold, which would likely suck in inexperienced traders, bit of a fake breakout before the drop down into the second daily cycle, a bit of a shakeout, which would give us the energy for that third push higher into the top of the intermediate cycle. That's generally what we would like to see. I would give this scenario perhaps a 50% chance, because it's also possible, at least equally possible, that gold will need a bit of a longer time to digest these significant gains that we've seen all the way through the beginning of 2024 and even earlier. For example, since those October 2023 lows, that's in less than 2 years, gold price has basically more than doubled. And what has performed even better than gold are those select juniors we discuss over here in Juniors in Metals category at myfinancesteacher.org. So for more details on that, make sure to join us while the juniors are catching up and multiplying the rally in gold. And as for gold itself, as I've mentioned, there are a couple of scenarios where gold either creates significantly new highs or takes much longer to digest recent gains. The Optimism Index on gold also suggests a similar outlook. Over the very longer term, usually this Optimism Index oscillates over the years between the good times, as in say 2020, 2021, and the hard times, as in say 2018-19 or 2022, part of 2023. Lately, since the beginning of 2024 or since the second half of 2024, gold has been in good times. These times are characterized with intermediate cycle lows, only dropping down to the sentiment level of around 50, whereas the hard times are characterized with the optimism dropping all the way down to the green line, to the level of 30, with those intermediate cycle lows in gold. Looking at what's been going on more recently, we've seen the intermediate cycle in gold. The sentiment only dropped down to low 60s. Again, we're still in good times, but moving into the future, there is still quite a bit of white space above, so there is a good chance that Optimism Index might push further above that red line towards the level of 80 and beyond for those new all-time highs. But at the same time, there is also quite a bit of white space below us, with the good times already lasting for over a year and a half. There is a chance, as I suggested, for gold to digest some of the recent 2024 gains, in which case this Optimism Index might just as likely continue down, dropping to at least the level of 50, which is normal for the good times, into the end of the ongoing new intermediate cycle. After all, looking at this distance of gold price above its 200-day moving average in percentage terms, at the top of the previous intermediate cycle, that's in April this year, we saw gold around 25% above its 200-day moving average. The only other time we've seen a similar peak all through this ongoing bull market in precious metals since the December 2015 was in the summer of 2020. And what followed that peak from the summer of 2020 is a very grueling decline, even down below the level of zero. That means gold price actually retraced all the way down to the 200-day moving average and temporarily dipped below it for a couple of months. Of course, history doesn't have to repeat, but it does often rhyme. We have seen quite a bit of extension above the 200-day moving average, and it's time to digest that extension. By the way, switching back to the US dollar again, back in the middle of 2020, when gold was far above its 200-day moving average, by then dollar has, just as more recently, experienced quite a protracted decline down into a couple of intermediate cycle lows, dropping all the way from 103 on DXY all the way to around the level of 90, significant drop. And during the next half a year to nearly a year, even as dollar hasn't really gained much, during the same time, over the next half a year to a year into the first part of 2021, even as the US dollar was only creating the double bottom, basically being flat, as dollar stopped dropping significantly, gold had to allow its 200-day moving average to catch up with the price itself. So as I've just mentioned, what it means for gold price itself and to our behavior is that we gotta be nimble over here to see what gold price as it bounces into this second daily cycle. We're gonna be cautious about this fake breakout into new all-time highs. And if gold continues with this, continuation pattern, an ascending triangle, we still might want to be nimble with, say, stop losses. And on the final note, let me just remind you again that some of the most interesting juniors are catching up to gold price with multiples. Here's an example of Montage Gold, which we discussed when the price was all the way down around $0.50. Since then, it has already gained multiples of X's, 7x to be precise. Of course, after such performance, you do want to take at least some of the profit back from the table and into your pocket. But for a lot of similar opportunities, make sure to have a look at our Juniors in Metals category. Again, that's at myfinancesteacher.org. Have a terrific Tuesday. Bye-bye.